Hello guys, welcome back to my YouTube channel. It's so good to have you back on the channel. And in today's class, I'm so excited. We're looking at a very interesting topic. A number of people have reached out to me to talk about this particular topic, and I am so happy that I'm finally doing this. So in today's class, we'll be taking a quick look at how to build your prepayment and accrual schedule on Excel. Every single thing that you need to know about building prepayment, what is prepayment, examples, like it's will be so interesting. So don't go anywhere, stay right there. Okay guys, so like I said earlier, this class is going to be very interesting and we have a number of items lined up. So we'll be taking a quick look at introduction, we'll look at the concept of cash on accrual basis, what are prepayments, examples of prepayments, double entry for prepayments, and finally how to build a prepayment schedule on Excel. That is just the course outline A. Then we'll move on to the course outline B. We'll learn what are accruals, examples of accruals, double entry for accruals, how to build an accrual schedule on Excel. Okay, so stay right with me as to why I decided to do a tutorial on prepayment and accrual. So today I interviewed a couple of accountants and I noticed that each time you ask them an accrual or prepayment question, there is a lot of mix-up. It's like so many people, even though prepayment and accrual is a concept that is quite, simple and straightforward, if I want to put it that way, but for a lot of people, it's still confusing. And I honestly do not know why. And that's why I've taken it upon myself to explain every single thing. Even though you are a non-accountant, I am sure that by the time you're done with this tutorial, you would have a full grasp of what prepayment and accruals is all about. So yeah. So before we go into the nitty-gritty of explaining what prepayment is, accrual is, and all of those things, let's take a minute to actually understand the reason for this prepayment and accrual. So let's refresh our memory about cash and accrual business, because I strongly believe that the reason for prepayment and accruals is because of the basis of accounting that you're using. So if you're using cash basis of accounting, you probably don't have any business with prepayment and accruals. If you're using accrual basis of accounting, then that is when you talk about prepayment and accruals. So let's go straight into it. What is cash basis of accounting? Under the cash basis of accounting, revenue is recognized when cash is received and payments are recognized when cash is paid. So it means that even though you have enjoyed something, you don't recognize it as an expense until you pay cash. It means that even though you have sold something to a customer, you don't recognize it as a revenue until you have received cash. That is the cash basis of accounting. And if you are using the cash basis of accounting, which I really do not think a lot of companies do, but let's say for some reasons your company is using cash basis of accounting, then I feel like you don't have any business with prepayment and accrual, because you only get to record transaction when cash is moving and like when you're paying the cash, right? Now let's move to the accrual basis of accounting, which is what a lot of companies use. That is what is being used in practice. Okay, so if your company is using the accrual basis of accounting, then you actually need to worry about prepayments and accruals, because now you're recognizing expenses and revenues and all of those things when they happen, not actually when you receive cash or when cash is paid. So that's the difference between cash basis of accounting and accrual basis of accounting. With cash basis of accounting, you don't necessarily have to bother with prepayment and accrual, because you only recognize or you only record transactions when there is movement of cash. But when it comes to accruals, regardless of whether cash has moved or whether cash has exchanged hands, you need to record those transactions. So the first question that we have is, what are prepayments? And that's like the basic question we need to answer. So what are prepayments? Prepayments are payments made in advance for goods and services whose benefit is yet to be enjoyed. So let's say, for instance, you work in a company and you guys you paid rent. You paid rent for January to December. You are still in January. You've not enjoyed the rent for February, March, April, May, June, July, August, September, October, November, December, but you've paid for it. That is a prepayment. You are paying for something that you are yet to enjoy, right? It's like an advance payment. You pay in advance. Another example is, let's say your insurance. So you pay for your insurance, even though you have not, your insurance an insurance that is supposed to cover like January to December, you pay for it in advance. You've not enjoyed the benefits, but you've made payment. That is prepayment. So prepayment is you, there are those payments that are made for goods and services whose benefits are yet to be enjoyed, right? So let's go to the next question. The next question we have is, what are examples of prepayment? Just like I had mentioned earlier, some examples of prepayment that we have rent. When you pay your rent in advance, the rent for a 1 year period, you pay it in January. The rent for January to December, you pay it in January. That's an example of prepayment. Let's take an example of let's look at HMO payments. So you know this HMO payment where you pay for HMO for your staff for January to December, but you pay it in January, even though they are yet to enjoy the benefit for the remaining month, but you've paid for them. That's an example of prepayment. Another one that we have is Microsoft license. I'm sure a lot of us are familiar with those things. When you pay for license, like for a number of software, your Zoom license, your Excel license, those licenses that you pay for, that are supposed to cover a 1 year period. You've not enjoyed, you're paying for it in January. It's supposed to be for January to December. You've not enjoyed the remaining part of the month, but you've paid for it. That's an example of prepayment. I'm taking my time to explain it because prepayment is actually a very big issue for a lot of accountants, and it can come in various forms. So I'm taking my time to explain so that you can have a deep understanding, and whatever form it comes while you're on your day-to-day work, you're able to tackle it. So let's move on to the next one. What is a double entry for prepayment? So to answer this question, let me give us a scenario. So let's say a company paid a rent of 1.2 million naira in January 2024. The rent is supposed to cover the period January 2024 to December 2024. Just like I had mentioned earlier, that is an example of prepayment. Why? Because you are paying for you are making a payment for something you have not enjoyed. The rent is still supposed to cover from January to December. We are still in January. You've not used February, March, April, May, but you've paid for it, right? That's an example of prepayment. So the double entry, at the point where you are paying that 1.2 million, you are going to debit your prepayment. Prepayment is an asset, right? It is recognized as an asset under the current asset in your balance sheet. So you debit prepayment and then you credit your bank or your cash with the 1.2 million. That covers it. The second part, which is on a month-on-month basis. So now the 1.2 million is sitting in your prepayment account. But on a month-on-month basis, by the time you start enjoying that rent, you have to start recognizing the expense. So first of all, the rent for 1 year is 1.2 million. If you divide that 1.2 million by 12, it means that the rent for a 1 month period is 100,000 naira. So on a month-on-month basis, you come back and then you debit your rent with 100,000, and then you credit prepayment with 100,000 naira. Debit your rent expense account, credit prepayment account with 100,000 naira. This is to reduce the prepayment. So by the time you debit your rent and credit prepayment 100,000 naira every month from January to December, by the end of December, the prepayment account will be zero. That is the double entry. That is how you treat prepayment in your books. Then the next one is how to build a prepayment schedule. Now, building a prepayment schedule is very important. You will probably ask, why do I need to build a prepayment schedule? The first reason why you need to build a prepayment schedule is because so that you don't get confused. Whatever prepayment figure that you are showing in your balance sheet, then you must have a schedule that speaks to it. If you don't have a schedule that speaks to it, you're going to get confused. The reason why you need a schedule is because there are different items, there are different type of there are different transactions that you would what's the right word now? There are different transactions that you enter into that will be posted to that prepayment GL, right? So if you don't keep a schedule, you will get confused. Then another reason is so that you can see everything at a glance. You can see how much you have, how much maybe for rent, how much you've amortized for the rent, how much month you have left, just to make everything clear and simple. Now, to build a prepayment schedule, all you need to do is just basic knowledge of Excel, and then we'll get into it. So I'll be taking us right into the Excel part now, and then I'll show us everything we need to do to know about building a prepayment schedule on Excel. Welcome to the Excel part of this tutorial, where I'll be showing you how to build your own prepayment schedule from scratch. Okay, so we're going to build a prepayment schedule together right now. So let's start by putting the name prepayment schedule. So just this board, and we're going to post the files to 16. So the first thing we want to put here is category, and I'll explain the reason why I'm putting category here. So let's say the category that we have here is rent. Now you understand that there are different For some companies that have like different branches, if you're a company and you have different branches, it doesn't mean that you pay your rent, for instance, at the same time. You might have a branch in Oyibo that the rent is due from June to July. You might have a branch in Okokomaiko that the rent is due from February to March. You understand? So you might necessarily not pay the rent at the same time. So that's why it's important that you have like different categories for different expense head, so that whenever you make a new rent payment, you can come under here and put it. You understand? So let's go. So the first field that you need is the date, which is the date of payment. You need description. You need to have a description. Then we need to have the period. Let's put the period. What else do we put? So we put the total amount. So how much did we pay? Total amount. Put the total amount. So we put the number of months. Number of months here. Then we have the amortization amount. Amortization amount is the amount that you'll be booking per month, which is the total figure divided by how many months. So in case you don't know, then we have the month. So we have January. So let's drag. Maybe that's up to 12. Let's see. July, August, September, October, November, December. Okay, so this is this for the period. So let's say the year in question is 2024. Alright, so what we just do is I will just merge and center for this. Then the next thing that we have is number of months remaining. We have number of months remaining. Then we have end of year. We have our end of year balance. Okay. So this is what it looks like. These are the feeds that we need, and I'll show you how to link up everything. So first of all, let's just quickly, make this a little bit beautiful. Okay, so the payment schedule. Let's also reduce this. So I'm trying to make sure I can see everything at a glance. Let me increase this on a bit. So let's bold this part. Control B. You can bold this part as well. Control B. Okay. So category. Let me change the color. I don't like this color. I'll make this part white. Okay. And this is too tiny. Okay. So this is the date, and then let's just come here. Another thing I want to do is I want to remove the grid lines so that everything looks neater. Sorry, I'm very big on aesthetics, so I love to make sure that whatever sheet I'm working with looks good and presentable. So Yeah, I'm sure you're wondering. Just go straight to the point. Yes, we'll get there. Okay, so the first thing you want to do is, so let's say you pay the rent for, let's use an example. Let's make an illustration here. Quick Limited. So we have a company, Quick Limited, right? They pay the rent of 1.2 million in January 2024 for the period. The rent is supposed to cover the period January to December 2024, right? In March 2024 rather, paid another rent for another branch, paid rent for Oyibo branch, paid rent for Oyibo branch, paid rent for Oyibo, no, let me say their Oyibo shop, right? Paid rent for Oyibo shop, the sum of let's say the sum of 1.5 million for the period January, okay, so for the period March 2024 to August 2024, for the period March 2024 to August 2024. Then, so that is that about the rent that they paid. So let's see how you're going to recognize this in your books. So let's start with this particular one, with the first one. They paid the rent of 1.2 million in January 2024. So you come here and put the date here, January 2024. If you have the exact day in January, you put it here. Description, rent payments, whatever description it is, just put it here. Rent payment for head office branch. Let's say head office branch for January to December 2024. Okay. The period. What's the period for the rent? The period is supposed to cover, the rent is supposed to cover January to December 2024. You just want to put it there. What was the total amount that was paid? The total amount that was paid was 1.2 million. That is more than 1.2 million. So you come here, let's just put this so you can see clearly. Number of months. How many months is the rent supposed to be used for? So we have January to December, which is 12 months. You put it here. What is the amortization? Amortization is how much you'll be recognizing as an expense every month. It's going to be equal to this total amount divided by the number of. Hello guys, I'm so sorry to interrupt the tutorial. I am very sure that you're learning a lot and it is very, very interesting. Okay, I trust my teaching skills. Hello. All right, so that was just on the joking side. All right, so I just wanted to plead with you once again to please subscribe to our YouTube channel. Please like the video. If you are blessed by this video, please like the video and drop a comment. Subscribing to our channel is free of charge. Liking the video is free. Commenting on the video is free. But all of these things that are free actually means the world to us. Truth be told, there are a lot of effort that goes into making these videos, and the least that you can do, the only way you can say thank you is by reposting, by sharing, by subscribing to our channel, by liking the post, and by commenting. Thank you so much once again for your support and your love. I honestly, sincerely, all of the adjectives in this world, appreciate it. Thank you so much. Let's get back into the tutorial. Of months, you put it here, right? So for January, we are in January right now, right? So this is the double entry that you are going to pass for January. At the point when they pay the 1.2 million, we'll debit prepayments. We'll debit prepayments with 1.2 million, and then we credit bank or cash. We credit bank or cash with 1.2 million. This is just to recognize this first double entry here is just to recognize that 1.2 million that we paid. Now, at the end of January, that we've enjoyed the rent for January, it is now time for us to recognize the expense. To recognize the expense for January, you come here, come to your prepayment schedule. Since we are done with January, we've enjoyed the rent for January, we just say equal to this amount here, amortization amount, 100,000. That's the amount for January. The double entry you'll be passing is equal to, so this is double entry A. The second double entry you'll be passing, which is double entry B, at the end of January, is debit your rent expense with how much? 100,000 naira. And then you credit your prepayment account with how much? With 100,000 naira. Once you do this, this is going to reduce your prepayment. This 100,000 will reduce the prepayment account. So at the end of January, you have 1.1 million left in the prepayment account, which is for the remaining 11 months, right? And you have 100,000 naira in your rent account. This is totally correct and in line with the accrual basis of accounting, right? So that is all you will do for January, because we don't have any other prepayment for January. Now let's move on. In February, you will check your invoices. Was there any other rent that was paid in February? Based on the information that we have, no. So for February, once it's February, you come here equal to 100,000. Sorry, equal to amortization amount 100,000. The rent for February is still 100,000. So at the end of February, this is January. So at the end of February, what we need to do is the double entry is we debit rent again with 100,000 naira to recognize the rent expense for February, and then we credit prepayment with how much? With 100,000. 1, 2, 3. Right? Our balance is remaining how much? Our balance will be left with how much? We'll be left with 1.1. We'll be left with 1 million for the remaining 10 months. Now you can. These are the figures that you'll be seeing in your GL. The prepayment balance in your GL will be showing 1 million, and your schedule will also show 1 million as well. So let's put the last formula that we have. So for this part, the formula is equal to the number of months here minus count tab this to this, and then we close it. So you can see that at the end of February, your schedule is showing that you have 10 months left in your prepayment. You've not still enjoyed the rent for 10 months. Now let's see the balance. How much is your balance? At every point in time, you can always see your balance. Your balance is equal to total amount that you paid, which is this, minus sum of all the expense that you recognize on a month-to-month, and then you close it. You can see that at the end of February, your prepayment amount left is 1 million. Even if you do the rough math by yourself, you can see that is the reason why it's important for you to keep a prepayment schedule. It makes everything clean and clear, like no issues, right? Okay, so let's continue. In March, they paid another rent. So you come here, they paid a new rent in March, right? For one of their shops. So you come here March 2024. What was the date? March 2024. What did they pay? Rent payment for Oyigbo office, right? For Oyigbo office for March. We don't need to put that details anyway. Rent payment for Oyigbo office. What's the period? The rent is supposed to cover March 2024 to August 2024, right? How much did we pay? We paid 1.5 million. 1, 2, 3, right? Okay, March to August 2024 is how many months? So we are going to count our fingers. March, April, May, June, July, August. That's 6 months, right? So the rent we paid is supposed to cover 6 months. How much is the 1.5 million is for 6 months? So how much is the expense per month? How much are we amortizing per month? So we just need to drag this formula down. If you don't want to drag it down, it's still the same thing as equal to this divided by this divided by this, right? So on a month-on-month basis, we have 250,000. For January, we had not paid that rent in January, so it's 0. February, 0. So in March, let's start with the first one that we have, the rent that we paid for the head office. In March, we're recognizing that much as the expense, 100,000. You say equal to 100,000, right? For the second payment that we made in March, we say equal to 250,000, right? So the total it's equal to, okay, So let's open it. Okay, so for March 2023, oh, I'm so sorry, I don't know why I keep saying 2023. So for March 2024, the rent you're going to recognize is going to be 350,000, which is a summation of these two rents, right? You can decide to pass the double entry one by one, right? Or you decide to just take the 350,000. So far you have a schedule to show the breakdown. You don't need to be passing the entries one by one, but it's left to you. So what I will just do here in this month is I'll come and debit my rent account with how much? With 350,000, and then I would credit my prepayment account with how much? With the same 350,000. Okay, so we'll come here. Let's drag the formula down so that the same. Okay. Let's remove the period that we have here so that formula does not count it. Just leave the space as blank. So number of months remaining for this second one is how many months? We have 5 months left at the end of March. For this other one, we have 9 months left. The balance left is 1,250,000 for this one, 900,000 for this one. If we do our what's equal to, we have, this is the amount that will be showing in your prepayment GL. If you do the math by yourself, do the raw calculation, this is the amount that will be showing in your prepayment GL at the end of March 2024. And you must have a schedule that speaks to it. This is the schedule that shows you the breakdown of that 2,150,000. Now, this is for one category of expense. There are other category of expense, let's say insurance. So for other categories of expense, what you can do is just come here, copy this, Ctrl C, Ctrl V. Okay, so escape. This is the other category of expense. So let's assume this is the other category. Let's delete everything we have here. So let's say the second category of expense that we have is insurance, right? Now, this thing is optional. You can decide that you don't want to do it category by category and you're just listing all your prepayment, listing them. Anytime you make a new prepayment, you just come here and upload it. But for me, what I do to make my work cleaner and neater is I categorize them. For rent, any rent that I pay, this is where I put all my rent prepayment. Anything that has to do with insurance that I pay, any prepayment that has to do with insurance, this is where I put them. So let's assume we paid an insurance. So let's also come up with a scenario. Paid an insurance. Paid an insurance to AXA Mansard. Paid an insurance to AXA Mansard for pool cars for the period January to December 2024. A total amount of 27 paid. So let me put the figure that we paid there. So let's say we paid 2.4 million. So paid 2.4 million as insurance premium to AXA Mansard for pool cars for the period January to December 2024 in January 2024. Paid 10 million as property insurance. Paid 10 million as property insurance to Leadway in February 2024 for the period February to January 2024. I hope that's 12 months. February, March, April, May, June, July, August, September. Yes. Okay, sorry, I had to count my fingers. Pay 10 million as property insurance to lead way in February 2024 for the period February to January 20 for the period February 2024 for the period February 2024 to January 2025. All right. So now this particular category, you come here, what date? So the first one we have is January. So say January 2024. What's the description? Insurance premium to Azamanzad. So Azamanzad for cars. So what's the period? It's covering January to December 2024. What's the total amount? We paid a total of 2.4 million. How many months is it covering? It's covering 12 months. January to December 2024 is 12 months, right? The monthly amortization is 2.4 million divided by 12, right? So the monthly amortization is 200,000. So for January, we'll just say equal to 200,000, right? Okay. All right. So we have 200,000 for January. At the end of January, the double entry that you pass is, first of all, at the point when you're paying the 2.4 million, you debit your prepayment account. You debit your prepayment account with 2.4 million, and then you credit your bank or cash. Credit your bank or cash with 2.4 million. 1, 2, 3. Okay. This is at the point of payment. Now, for January, by the time you are done with January, you know that you've enjoyed the insurance premium for January. It's time to recognize the expense for January. To recognize the expense, you debit insurance. You debit insurance expense GL. Debit your insurance GL, which is an expense GL, with how much? With 200,000. And you credit your prepayments with how much? With 200,000, which is the figure that we have here. This 200,000 that we have here, right? So that's that for January. In February, we realized that they paid for a new insurance. So you come here February. What's the date? February 2024. Insurance premium to Leadway. Insurance premium to Leadway for property, right? Forgive my description. Okay, the period they paid for the period February 2024 to January 2025. That's how many months? That is how much did you pay? First of all, we paid 10 million. 1, 2, 3, 4, 5, 6. That is for how many months? That is for 12 months as well. So the amortization amount is 83333, which is 10 million divided by 12. So for January, there's nothing because it was paid in February. So for February now, what's the total amortization that we have for February? Let's start with this first one that we have here. So for February, we recognize 200,000 naira as well. Equal to 200,000. That's the end of February, right? And for this new one that they just paid, we say equal to this. So at the end of February, this is the total amount that we have as the insurance. So for February, the double entry you pass is you debit your insurance account, which is an expense GL, with 1033333.33. This figure here, right? And then you credit your prepayments with 1033333.33, right? So that covers that. Your balance. So let's do the balance. We can just copy the formula from here. Since it's the same thing, let's just copy the formula and paste here, and then we drag down. So you can see for this particular one, for this first one here, at the end of February, you see that we have how many months left in our schedule. We have 10 months left in the prepayment that we paid, right? For this other one, for this other insurance that we paid in February, you can see at the end of February we have 11 months left because we've only enjoyed 1 month out of the 12 months that we paid for, and these are the balances that we have left for both of them. So if you check your prepayment GL at the end of February, the figure that you have is going to be a summation of this figure that you have for rent plus this figure that you have for your insurance. So your prepayment GL would show you that you have this particular figure. This is the figure that will be in your prepayment GL, and this is the breakdown for it. So in case you have other expense category as well, we've talked about rent, we've talked about insurance. So let's say you have like marketing expenses that maybe you paid for marketing flyers that are supposed to be used from January to December as well. You can create another category and call it marketing. And once you're done, you just come here, add the balance to this particular figure here so that it reflects what you have in your GL. So this is how you build a simple prepayment GL. A simple prepayment schedule for your company. Now, please listen to this tutorial and let me know if you have any questions. If there are anything you think you want me to cover, just let me know. Your questions are welcome. Thank you very much. Okay guys, thank you so much for watching till this moment. That is the end of our class for today. I hope that you have learned a thing or two, and I'll be very open to welcome all of your questions. The group chat would be open from a certain time that will be communicated on the group, so all your questions can be dropped on the group for prompt answers. Thank you so much once again for watching the tutorial. We're going to do a part 2 which is going to cover Accruals. So we'll do a part 2 that will cover Accruals, and that will be dropped anytime from now. That would also be communicated to us on the group. Thank you so much once again, and I'll see you in the next